I was looking at Safaricom in Kenya.
Yes.
And I saw their chart on what do you call it? TradingView. And to me, Safaricom is this giant, big, huge company in Kenya, right? Like the same way you're asking me, do you think Apple will be around 50 years from now? Yes. So if you ask me about Safaricom in Kenya, I'm thinking that's a huge company. I mean, like these people get all these services from Safaricom. It's going to be here for a long time.
Correct.
But then I pull their chart and I see that it's been dropping. Now, for me, I'm like, I need to jump into this like right now.
Yes.
And buy a whole lot of stocks.
Right.
Every time I open TradingView, but again, I don't know why their stocks have been going down. But a company like that, somebody here who is a Kenyan, or even somebody back home, do you think this is a good time for us to buy Safaricom stock because they are really like down?
Well, actually, I'm adding on Safaricom personally. And like we say, this is not financial advice. People need to do their own due diligence. But Safaricom, if you travel to Kenya and you do any kind of business, most likely, if you don't have M-Pesa, it'll be a hassle because a lot of people are just so used to trading in M-Pesa and paying services in M-Pesa and making phone calls. This is a company that is almost a monopoly.
Yeah.
And it has just started doing business in Ethiopia. If you look at its recent reports, it added 3 million users.
But what's causing them to keep declining? Why are they just declining?
So part of the reason is the profitability. Obviously, cash flow is usually the biggest in companies. If there is no revenue or they drop in revenue, investors will shy away. Because let's say Liz and company, I invest in you and I have given you $10. And every quarter you're saying, oh, I did not generate any money with your $10. Actually, we have lost $2. What am I thinking? I'm saying, well, maybe this is not the company. Yeah, she's not doing what she's supposed to be doing. I was expecting her to have grown these into $12 now.
Yeah.
So some people will jump off, right? But if you think of fundamentals and say, okay, perhaps Liz is using the $10 to build the platform. She is growing capacity. She's acquiring new managers. She's inventing in technology. Now I can wait. So if Safaricom is jumping into Ethiopia and they want to grow M-Pesa in Ethiopia, what's the population of Ethiopia? 100 million?
But that's a good thing for them. That's a good thing
exactly.
for Safaricom.
So if you think that way, then the price dropping is actually a gift for you. You will say, you know what?
For me who want to invest.
Yes.
But had I been an investor from 5 years ago, 10 years ago, and every day I look at that chart and I just keep seeing it going down and down and down, am I thinking it's time to sell my stock and get
it? And some people will definitely sell.
Okay.
Let's say you had bought it at the high of 45 and now it's at 13. You have lost almost 70%, a lot of money. So some people will definitely give up and say, you know what, I'm done. I don't want to do this. But those that are going to wait are going to be disciplined, patience and discipline.
We go back to the two things you talked about, patience and discipline.
Parents. Yes. But so to your question, if you're thinking about Safaricom and such companies, just go back to what they do. Look at the metrics, listen to their earnings call, what's happening to that company. And this could be the greatest gift you get in the next 5 years. If 5 years from now, Safaricom is trading at 45, and now you are listening to this YouTube, you will be like, why didn't I even do it then? You'll have missed out. So think long-term about the stocks and have a plan for them. So if you're going to participate in some of these treasury bills and bonds, there's a process to it. But there's also, particularly in bonds, they pay interest semi-annually. So they pay twice a year. So for instance, if they say 17% interest, they will pay out twice a year. There's a schedule that's already published ahead of time.
Is this money taxed when you get your
right? So some of the treasury bills are taxed at 15% interest rate of the you collect. Treasury bonds, if it's just an ordinary treasury bond, it's also taxed.
Okay.
But there's one particular one issued in Kenya called infrastructure treasury bond. And you will hear it popularly called IFB.
Yes.
They have issued several of these now, and we can talk a little bit about it because that's the most lucrative of all these bonds because there's no taxes on it.
Okay.
All right, so now let's plant on these infrastructure bonds. How do we do it? Here in the US, you will go to treasurydirect.gov. I have a link. Yeah, we'll look at that link. Treasurydirect.gov. You can open an account in less than 5 minutes.
Okay.
And the minimum to invest in treasury bonds, Series E, Series I here in the US is just $25.
And is it open throughout? Or?
Yep, it's open. Yep. So you just go and open the account and then choose whatever series you want to buy or sell, EE bonds, and you're good. I'll share that link.
Perfect.
Those in Kenya, there are 2 ways of doing it, actually 3 ways. You can open an account through CBK, Central Bank of Kenya. They have an app that they launched in October called TAO app. For those in diaspora, you can just open that app and follow the process, Kenya ID, passport, KRIP, and all that stuff. And I know it's a lot of information, so
which is good. Listen, knowledge is what is it? Knowledge is power, information is power.
Yes.
I think sometimes we just don't know. We make the wrong decisions because we don't know. These are not things they teach you in school, and sometimes we don't pay attention. We want all the hyped up, all the exciting stuff, but a class like this, I think here people would pay thousands and thousands of dollars to get this information. So you're giving it for free, and hey, if only 20 people take it and run with it, you've done your job.
Yep. That's the goal. Anybody is interested in doing this and they know that they can benefit from it, that's all you can do. Your platform shares information. You want people to progress. This is a good way of doing it.
Absolutely. Hello, Peter. How are you?
I'm good, Liz. How are you?
I am doing great. I am so happy to have you here. And guys, this is a different type of interview. I don't even want to call it an interview. Actually, this is a class. It's a very, very rare class. Never done anything like this before. But Peter is here loaded with tons and tons of important information. This is information that we don't get taught in school. I think it should be taught in schools. I don't know why nobody ever decided that this is something that kids need to be taught. And the type of information that Peter is here to share with us, I also know that even here in America, you would have to pay a lot to attend some of these seminars that are taught by gurus, people like Dave Ramsey, Susie Orman, and all that. They give you a little bit here and there, but I'm telling you, people pay thousands and thousands of dollars to attend these conferences. So here he is providing this information for us for free. And I hope that you guys stay to the end of this class. And I believe that you'll learn a lot when it comes to investment, whether it's here in America or in Kenya. So Peter, introduce yourself to our audience, just so they get to know a little bit about you. Tell them where you are, who you are, where you came from, as far as Kenya, where are you from, where did you go to school, and take just 2 minutes, then talk about your transition here, and then we jump into the class.
Awesome. Thank you, Liz, for having me. I know this is a Sunday afternoon, and it's an awesome time to discuss equities and to talk about money market. It's the beginning of the year, so it's a good place to think about what you'll do the rest of the year. So just in introduction, I'm going to share a slide here so that you can just have a snapshot of who I am. So I have these 4 boxes that I think summarizes everything. I'm a Christian, a husband, a father of 2 young adults. Nima is actually working now. She's graduated from University of Maryland. I have Sarah graduating this summer from Loyola. And I'm married to Teresa Momashiko. A lot of people know her here in New Jersey. And this is why I do what I do, because of them. And I'm excited that I'll be sharing all this information. I grew up in Kenya. Actually, a lot of people, when they, in the past, they never knew about a small town called Burnt Forest. But after the clashes and what happened in 2007, then people understood, oh my goodness, it was terrible. That's where I grew up, went to high school in Western Province, and then transitioned in the US right away after Form 6. So you can tell how old I am.
Wow. Okay. Okay.
But how I got here is really something that was almost a mystery, because I had a cousin in Pennsylvania that had come over, and I asked him, how do I come over? He said, well, you can apply to schools. And I was researching college education. There's no way I would afford it. So he told me, you know what I'll do? I'll send you a booklet of US colleges. So go ahead and browse through them and figure out where you want to go. So my goal was to look for scholarships. So I ended up sending 300 letters to US colleges.
What?
For scholarships, yes.
Wow.
And out of 300, there were 2 that responded and said, yes, we do have a work study scholarship. And that's how I ended up at New Jersey, a small college called, back then it was called Philadelphia College of Bible, PCB. And now it's called Kean University. That's how I ended up here. And I thank God for the opportunities that I've had in life. That's why I value information and I value what I've learned. And when I came to this country, one of my mentors, somebody that I love so much, he passed away some time ago. His name is Larry Bucket. I don't know whether a lot of people know him, but he was inspiration. He talked about money and talked about Christianity. And I could not quite understand, you talk about Christians, you don't think that they should care a lot about money. But he was very instrumental in figuring out and understanding why you have to invest and how to invest the right way. Apart from that, we live a debt-free life here in the US. I have gone back and forth about how we ended up being debt-free, but one of the reasons was because of not understanding. We had a huge debt in the beginning, and I never understood, how do I get out of this? But having a plan and reading and researching has really allowed us to become debt-free. This is the schools I've gone to in terms of investing. There's a college called Online Trading Academy. It teaches stocks and futures markets. And right now I'm enrolled in Boston University CFP program. CFP is Certified Financial Planner. Essentially, you become a financial advisor after you finish the course. And remember I told you about the 300 letters I sent for scholarships?
Yes.
I did the same thing. I sent out 13 letters to these colleges looking for scholarships. And now I'm actually studying for free at Boston University because I got 2 scholarships.
Wait, the CFP program, you're doing it for free? Oh, wow.
Yes. Yeah, because I have 2 scholarships, one by Robert J. Grosky and one by Facet Scholarship for Diversity.
Awesome.
So there's always opportunities if you're looking for them. You just need to figure out what you want. Apart from that, I am an independent trader and thinker. I provide ideas. I'm also passionate in finances, volleyball, and I like taking naps.
Okay, thank you. Now we know you. At least we have an idea who is Peter and where you came from.
Great.
So we're going to go ahead and jump into this class. I'm very, very excited about this class. I was absolutely looking forward to today because there's a lot of information here. So take it over.
All right. So I did mention that I am the CEO of Peter and Peter Investors. This is the company that I own and operate in partnership with another Peter. That's why it's called Peter and Peter. Peter and Peter Investors. But what we do is teach and provide information about equities markets. So we'll just jump into it. These are some of the conferences and presentations I've done over the years to our community. And our community is awesome because they love information. And so when you ask me to come over, I'm just going to add Kenya Diaspora Connect to this list. It's really awesome that I'm able to do this. Of interest really was one that I did to Advocates of Health Equities for Minorities. This is a club ran by a student of mine that took one of the classes. She was studying at UMass Lowell.
Okay.
And actually, she's graduating now. And they had questioned about what do we do as teenagers? How do we invest as young adults? So we'll talk a little bit about that one. But before we do all that, these are the disclaimers. You have to understand there are no guarantees in the stock market, no guarantees in equities market. If somebody tells you that they guarantee you a certain rate of return, you should run because there's really no guarantees.
Okay.
So what I'm providing here is not legal information, not financial advice. This is just educational information purposes only.
Yes.
Right? So obviously it's being recorded, and I don't know what your recording criteria is, but obviously there's copyright to it. So I hope that people don't just take it and misuse it.
Yes, so they cannot come and copy this video. Let's make that clear, because this information is copyrighted to Pete and Pete investors.
Correct. All right. So now we can jump into items to consider. So I thought about your audience, Kenya Diaspora Connect. So we have Diaspora connecting to Kenya and Kenyans that are interested in coming over to the US and North America and other parts of the world.
Yes.
So I figured, what should we consider this year in terms of equities, in terms of stock market, in terms of investing? So I have several items to consider. I think I have 5 things to consider. So we'll start off with this slide that can be very confusing. Student loans, taxes, pension, mutual funds, this is information that can really wreck your brain. And if you don't know what to do with it, then you give up. It's a lot of jargon in terms that are confusing.
Yeah.
But as the leader of your home, as a parent, if your child asks you about this information, you should know. You should not say, I don't know. If they tell you, okay, if they're, let's say, working at McDonald's, for instance, and they say, okay, I'm interested in investing, what do I do? You should know. So that's why we share this information, so that you can be able to dig a little bit deeper.
Okay.
There are 2 things that you should pay attention to. And these are, apart from your own parents, these are 2 parents that you should take care of. Patience and discipline. Those are the parents of financial success. Patience,
discipline,
and discipline.
Okay.
Yes, those 2 parents, if you pay attention to them, you will do well. Otherwise, you will find yourself in your 60s or in your 70s, and you're trying to come up with uncoordinated products. You're trying to figure out, how do I get money? And at that point, you're really running out of time.
Okay.
So what are your goals? Usually in terms of goal making, you want to have short-term goals, medium-term goals, and long-term goals. Short-term are usually less than 2 years. Medium are requiring 2 to 10 years, and long-term are anything above 10 years. But when you design these goals, I want you to think about the word SMART. Are they specific? Are they measurable? Are they attainable? Are they realistic? And are they trackable? So if you come up with a goal, let's say I want to save $1,000 by the end of the year. So you become very specific, you measure it, and then ask yourself, is it attainable? And how is it going to be attainable? Be realistic. If you do $10 or $20 a day, then you track it.
Yeah.
That's how you end up achieving all these goals, short-term, medium, or long-term.
Okay.
Now, you should not have more than 4 goals realistically, because when you create 20 goals or 30 goals, then it just becomes too overwhelming. Just take 1 to 4 goals and then prioritize them. Say, this year, I want to own a home, or this year, I want to save $20,000. Just 4 goals maximum, and you're good.
Okay.
Right. Now, so item number 1, let's consider this, certificate of deposits. A lot of people have heard of CDs. Probably they have invested in CDs. This is usually one of the safest places to put money. You put it for a specific period of time. So you can say 6 months or 9 months or 12 months. At the end of that duration, whoever has issued that CD returns your money, your capital, with interest. And that's the end of it. When you withdraw before it matures, there's usually a penalty.
Yes.
So you want to make sure that if you choose a CD and it's going for 6 months, you are waiting until 6 months to collect the full interest that you got.
Yes.
So the amounts usually, the rate is usually fixed and guaranteed. If it's 5% for 6 months, guaranteed. CDs are protected by FDIC. This is the Federal Deposit Insurance Corporation. This is a US government entity that will secure your money up to 250,000.
Okay.
So if you have 250,000 that you're thinking I can put in CD, even if that bank fails, and you've had several bank failures. Right now there is a lot of concern about New York Citibank, NYCB, that's probably going to default. I don't know, but as long as it's insured, you're good.
Okay.
Now, so last October, I published these interest rates by CDs, and it's become actually very lucrative because you look at this list, and Capital One was issuing a 6-month CD for 4.3%, right? CFG Bank had 5.6%. Synchrony had 4.9%. Then we have treasuries at the bottom. So we'll talk about treasuries a little bit and compare this to CDs. But just to recap about CDs, it's just fixed rate and guaranteed. So you just need to figure out which bank is issuing what and go ahead and invest in it.
Okay.
Now, there is money market accounts and money market funds. So you want to separate between CDs, money market accounts, and money market funds. So we've talked about CDs.
Yeah.
Let's talk about money market accounts. So these are traditionally money market accounts offered by banks, and they are fully liquid. There's no restrictions in withdrawals. And I have a good example here of Discover Bank. There was one yield of 4.25% per year. Money market funds, the difference there, these are offered by brokerage firms. So like a Schwab or Fidelity, TD Ameritrade, that's a money market fund. And what they do, it operates the same way as mutual funds, and they're also liquid, and they also have a yield, usually a little bit lower than money market accounts. So the last time I checked, for instance, VMFXX was at 3.87%. So just from this screen, you can see a CD is yielding 5%, money market 4.25, money market fund 3.87. So it's up to you. Figure out where do you want to put your money.
So that's
all right. So yes, now I can jump into those in Kenya. They are saying, okay, this is not something that we have access to.
Yes.
Well, in Kenya, you do have access to unit trusts, equivalent of money market funds, or mutual funds. So you can call it a comparison of mutual funds in the US, unit trusts. So these are collective pools of money that generate income for investors. So I just found this publication. Actually, it's published every week, but I updated this screen to show the current rates as of February 2nd. So it's very recent.
Okay. And this is in Kenya?
Yes, this is in Kenya. So you can see that Ethica Money Market Fund is giving you 17.2%.
Wow.
Right? You have NABO, you have Saiton, you have CIC, and the list goes on and on. So if you're putting money in these funds, this is the kind of effective annual interest that you're looking at. The one thing that you should note and make some study about is that not all of these funds are created equal. The fact that you see Ethica issuing 17.2, you need to dig a little bit deeper and figure out what that fund is, who runs it, and we'll talk a little bit about some of the things to consider. For instance, if you're going to go with capitalization of how much they are holding, all these funds, you see CIC is down here at number 22. In terms of assets under management, it's actually the biggest.
Okay. Oh, what's your interest? Their interest is what? 12.2?
And their interest is at 12.2. So you may want to figure out, okay, why would CIC that has all the money collectively issuing 12.2, yet I have something like Etica issuing 17.2.
Okay.
Right? So you have to consider who is doing this, why they are doing it, and go back into management. And we'll talk about this in a minute. So unit trusts, collective funds in Kenya, and you can invest in this kind of funds.
Question for you before we move to the next slide. I'm looking at this, the unit trust scheme in Kenya, and I know you say there's a lot of stuff to consider there. And then the previous one, we were looking at the US, like the CDs, the money market.
Yes.
Right. But it looked like in Kenya, the percentage is like 3 times that of that you would be getting here in America. So I'm thinking, okay, of course you want to diversify,
Yes.
but I'll be looking at this and say, oh, my 20,000 US dollar or whatever amount I'm planning to invest is better off in Kenya than in the US. Or is my reasoning?
Or you have to consider, you might actually think that way and say, actually, Kenya is giving you a better return. But consider these are the 2 factors, inflation and currency risk.
Okay, got you.
So inflation right now is at 6.9.
Yes. Yes.
So if you take 7.2 minus 6.9, that's your effective APR. You have to consider inflation. You know, the cost of goods is much higher than this interest that is being offered here. And then there's also currency risk. So in October last year, $1 US was trading at what, $110 Kenya shillings. Yeah. Now it's 160.
Yes.
So your 20,000 is effectively not 20,000 anymore. It's actually much less than when you invested back in October.
Oh, so I see what you're saying. I see what you're saying. Also, my other question while we are here is, I know we talked about like in the US, when your money is in the bank, no matter what happened to the bank, if the bank goes down, your money is insured, is guaranteed. You'll never lose it. I think up to 250K.
Yes, yes.
Do they have similar insurance in Kenya?
Yes, they do. There's actually, they still have insurance in Kenya. Okay. The only concern I have with it is access to that money when a company defaults. And I'll give you a good example. I don't know whether you remember, there was a bond issued by a bank called Imperial Bank.
No, I don't know anything about it.
This is almost maybe 8 years ago or 10 years ago. Okay. If you look it up, you'll find it, Imperial Bank. So they issued a bond, and we have talked about bonds being safe places to put money, but then it was actually a scam.
Oh, in Kenya?
Yes, that bank was, for some reason, they said that they were regulated by central bank and they were actually told to go ahead and issue that bond. And I actually did put money in that bond.
But where was the government when this was going on?
Exactly. That's the problem, because it ended up defaulting. They never paid out. It became a huge mess. And the government took over and said, okay, we will refund investors. Obviously, there are those that put more than $1 million. There are those that put in 200,000. And up to today, those that put in more than $1 million have never been paid back.
Wow. That's crazy.
So you just have to understand these things when you invest and understand the risk. And it became a big surprise, you know, where you think bonds in Kenya will be the safest. Imperial Bank is really a very sad story. And hopefully somebody from the government, you know, listening to you, Liz, they can say, you know, let's take up this story and figure out what happened. Because those investors have never received their money back.
Wow, that's not good. So not everything that glitters is gold, yeah? Okay, so now that makes it, because I'm asking this because that's what some of our viewers, because even me, I was like, no, I'm better off in Kenya. But once you start to consider these factors, then maybe
you just have to do due diligence, understand investing is risky.
Okay.
Okay, so disadvantages of investing in nature. So you're in Kenya now. What are the disadvantages? Okay. Right. So obviously, fees is a big one. You are talking about, you know, I'm putting money in Kenya. So fees will be something you talk about, because if they're giving you 17.2% and the fees come out to 5%, you see now you're already reducing your outcome.
Yes.
Right. Then there is performance. how has it behaved in the last 5 years, in the last 10 years? What's the actual rate of return in 5 years? Because they can say, last year we had a 20% return.
Yes.
But if you go back 3 years, it was negative. Right? So you have to be careful and look at long term. I'm holding it for 3 years, 5 years. What's the return there?
Okay.
Taxes. Obviously, you can't avoid this. So if it's 15% taxes on your return, you have to take it out. Then you have less control because somebody else is managing this money, not you.
Yeah.
You're giving it to them and you don't know where they invest it. But some of the advantages, you don't have to be an expert in investing, which is a good thing. You just put the money there. Diversification, some are very good at diversifying where they put the money. There's income potential. There's daily liquidity. You can get your money back very quickly, and there's scheduled maturity. So if it's 6 months, it's only there for 6 months. Okay. So what to look for when you're investing in money market fund, money market accounts, think about the investment objective. So ask for a prospectus. Before they issue these funds, they publish a prospectus of everything about the fund, where they will invest, who are the managers, what's going to happen with that money, what are the fees. Look through it so that you can understand the strategy behind that fund.
They will give you the whole portfolio of every place where they're going to invest your money? Yeah,
they should give you a whole description of where they put the money, what they do with it, the performance of it. It should be a good place for you to look at.
And that's before you invest?
Before you invest, yes.
Okay.
Just ask for a prospectus or a fund fact sheet and go through it.
Okay.
All right, so you're looking for good and consistent performance. In the last 3 years, it's given you 10%. Last year, for 5 years, 12%, 10 years, 15%. That's very good performance.
Yeah.
And then you're looking at whether they're issuing dividends, right? So if you put in $10,000 and they're issuing a dividend of, let's say, $4 per year. So while the capital is in growth mode, they're also distributing profits with you. So that's a good thing.
Okay.
Right? So if you are interested in dividends, that's something you get attracted to.
Okay.
All right. Then look at shareholders. Who are the major shareholders? Is it institutions or is it individuals? Because if it's individuals, they can, decide to take out their money.
Okay.
Right?
But
then you're looking at board of directors.
Can the institution also decide to take their money out?
Yeah, they do. Yes, they can. Right. But usually institutions, they don't just get in and out. It's not something that they are looking to take out their money. They must have done some due diligence ahead of time. Because then it's really a collective pool too. They are looking at some of the investors. And then financial strength, track record. So just some of the things, you just go through the prospectus and try to understand it.
Okay.
So this is what I did with one of the prospectus. Mansa X is a fund issued by Standard Investment Bank. Last year, it was actually trending in most of the WhatsApp groups. And I went through the final notes just at the bottom and figured out, okay, if I put money here, what should I expect? So they say 0% initial fee. So you put in $10,000, there's no fee to put money in.
Okay.
0% redemption fee. So if you say, give me my money back, no fees. Minimum investment, $250,000. Minimum top up, $100,000. Then there's a 6-month lock-in period.
Okay.
So if you're putting money here, you cannot withdraw until 6 months. If you
this is like US, it's like similar to USCD?
Yes, very similar, right? But then there is a 5% financial services charge.
What?
Okay.
So
then there's a 10% performance charge.
That's already 15%.
Right. And then there's a 15% performance charge applied to the USD fund. So some of these charges are going to be applied if there is a surplus or if the fund does well. So you just have to understand if they perform very well, above 25% hurdle rate. So you have to understand too, what is the hurdle rate? How is it attached to it? That's why it's important to talk to these people. and figure out, okay, what does this mean?
What is the gauge for me to be able to tell whether they have performed well or not? Is there a mark? Is there a
So the benchmark,
target?
yes. So, right. So the benchmarks usually are attached to the indices or index.
Okay.
Right. So here in the US, the benchmark is S&P 500
Mm-hmm.
because it has returned consistently about 8 to 12% per year.
Okay.
Right. So that's the benchmark. If you cannot, in Kenya, it could be the government bond as a benchmark. If the government is giving you a treasury bill of 12% or 15%, why would you put it in a stock that is only giving you 2%?
Mm-hmm.
So those are the benchmarks that usually they look and say, okay, if we go above that benchmark,
mm-hmm.
then we can charge this 10% performance charge for ourselves.
Okay.
Right. So these are some of the things that you will need to look at the prospectus and figure out, do I understand it? Am I okay with it? And if you are, then you can go ahead and invest in.
Okay.
All right. Number 2. All right, so we are good with CDs and money market accounts.
Yes.
Now let's move into treasury bills and bonds.
Yes.
And we'll talk a little bit about corporate bonds, green bonds, municipal bonds. Treasury bills, treasury bonds. The difference here is the duration. So you are loaning government money, and the government is in return issuing you a guaranteed rate of return. Now, if you invest money that is going to mature in less than a year, whether it's 91 days, 182 days, or 364 days, that's a treasury bill.
364 days, you meant to say, because it says yes. You meant to say days. Okay.
Yes, this is days, that not
okay.
yes.
Okay.
Okay. Yes,
All right.
I'm glad you caught it, yes.
Okay.
Right, so anything below 1 year is a treasury bill.
Okay.
Anything above 1 year is a treasury bond.
Oh, okay.
Very simple.
Okay.
That's not complicated, very simple.
Okay.
So if you are looking to collect your money in 3 months, you can put it in a treasury bill, and those rates are published by governments ahead of time so that you know exactly what you're looking for. Yes. And in 3 months it matures, they give you your money back. Right? So when you invest in bonds and treasury bills, it's risk-free, but I put here almost. Okay. Almost risk-free, because we know that some governments have actually defaulted. And there's a big conversation right now on whether Kenya was going to default. There's a Eurobond due in June. What are we going to do? If you have, listened to Njoroge and you have watched, all those videos, then you become concerned whether the government is going to default. But question for you, has the Kenyan government ever defaulted? No, it has not. No, it has not. If this will be the first time since. Yes, this will be the first time. Just like Ethiopia never did, but they actually defaulted was it last month or a couple months ago? Okay. You have Ghana that defaulted. You have Argentina that has defaulted, Sri Lanka. So all those countries have defaulted in their payments. So when you invest in government, just know there's also some risk because it can default. So when they default, does it mean that you have lost your money, or does it mean when the government is able to get back on its feet, then you see that? So some of the debt is restructured. In the case of Ghana, they actually pushed back the repayment years. So if you are due to get paid this year, they cut some of those interest and say you will not be paid until 10 years from now. Oh, wow. So there's a restructuring that occurs in those payments. And you are going to lose somehow, because if, let's say, you wanted 17% and now they're only giving you 7%, see, you've already cut your interest by half. And if you're not going to collect anything in 10 years, see, that time period has elapsed with you getting nothing. Okay. Right? Will they double? Will they double once they pick up, or they will just extend it? Right. So it really depends on how they restructure it, and it's country specific. Okay. So you can dig a little bit deeper and find out what happened. Okay. But in terms of defaulting, just understand that there is that risk of defaulting. Okay. When I'm putting this money into governments. Okay. All right. So we understand what a treasury bill, what a treasury bond is. Yes. So if you're going to participate in some of these treasury bills and bonds, there's a process to it. But there's also, particularly in bonds, they pay interest semi-annually. So they pay twice a year. So for instance, if they say 17% interest, they will pay out twice a year. There's a schedule that's already published ahead of time.
Question: Is this money taxed when you get your
right? So some of the treasury bills are taxed at 15% interest rate of the you collect. Treasury bonds, if it's just an ordinary treasury bond, it's also taxed. But there's one particular one issued in Kenya called infrastructure treasury bond, and you will hear it popularly called IFB.
Yes.
They have issued several of these now, and we can talk a little bit about it because that's the most lucrative of all these bonds because there's no taxes on it. So a lot of people look into it because you don't get taxed on it, right? But before we get there, I know some people will say, oh, then I'm not going to invest. If there's that risk of government, I'm going to be careful. But there's just a verse here that you should consider. If a person waits for perfect weather, he will never plant his seeds. If you're afraid of every cloud will bring rain, he will never harvest his crops. You don't know where the wind will blow. You don't know how a baby grows in its mother's body. In the same way, God suddenly made all things. But you can understand what he's doing, begin planting early in the morning, and don't stop working until evening.
Oh, wow.
It's a very good verse to teach you that, things happen, but don't just stay on track on your goals and what you want to do.
Yeah.
Keep working, keep planting. All right, so now let's plant on these infrastructure bonds. How do we do it? Here in the US, you will go to treasurydirect.gov. I have a link. Yeah, we'll look at that link. Treasurydirect.gov. You can open an account in less than 5 minutes. And the minimum to invest in treasury bonds, Series E, Series I here in the US is just $25.
And is it open throughout? Or?
Yep, it's open. Yep. So you just go and open the account and then choose whatever series you want to buy or sell, EE bonds, and you're good. I'll share that link.
Perfect.
Those in Kenya, there are 2 ways of doing it, actually 3 ways. You can open an account through CBK, Central Bank of Kenya. They have an app that they launched in October called TAO app. For those in diaspora, you can just open that app and follow the process, Kenya ID, passport, KRIP, and all that stuff. Okay. All right. So open an account through Central Bank of Kenya and follow the process to be able to buy these treasury bonds and treasury bills. Then you can also do it using your bank. If you have a Kenya Commercial Bank, NCBA, there's a way also that they buy bonds for you and participate in it. Then there's a third option that is what I use. It's called Njoroge. This is a platform regulated by Capital Markets Authority. It's a fund manager. It's a very easy way of participating in these bonds. And I've actually have a partnership with them. And I have also had the CEO talk to investors in the US on what they do, how they do it. That platform is actually an amazing platform because let's say you decide to sell your bond, all you have to do is issue instructions and they do it for you. One of the considerations that you should look into is the fees associated if you're going to do it with the bank. Obviously, they will do this for you, but at a fee. The normal fee is really minimal. If you put in more than 1 million Kenya shillings, it's 0.75%.
0.7.
0.75. Yes. Less than 1 million, it's 1%. Right. And then I have instructions here of how to open that account. Very easy way of reaching Caroline Njoroge of reaching me, just so that you can get some help in doing this bond. So if you want to participate in the upcoming bond, which is actually already in progress, we have another 10 days or so to participate in that bond. So if you're interested in this bond, you have to rush a little bit to be able to open that account. Now, we had a question about Central Bank because somebody reached out to me and said, I did buy a treasury bond using Central Bank of Kenya and I wanted to sell it.
Or before the maturity, the maturity
Yes,
date?
before it matures, yes.
Oh,
And they were surprised to learn that they had done it at 13.9%. The government was buying it back at 10.5%.
so they were losing.
Right? So they were very concerned because, yeah, I'm losing. How is it that I thought I would get my money back, that I put in? But if you go to the website, there is this specific instruction they have put in there. They do not want whoever is participating in treasury bonds, they don't want you taking money out.
Yes.
So if you do, they can buy the securities back, but at a punitive rate.
Okay.
To discourage investors from doing this.
Okay.
That's the difference. If you do it with Ndovu, there is no punitive rate. You get back the money that you put in.
How is that possible with Ndovu? Because Ndovu is also investing.
Yes, it's also an investor of, it's also an investor of these funds, and they have no incentive of taking your money. There's no reason for them to take your money at a punitive rate.
But what I'm saying is, at the end of the day, are they not getting your money back from central bank at a lower rate, Ndovu themselves, when you tell them, I want to pull my money out of this bond?
Right, but they're not just investing money in bonds. They have corporate bonds, they have ETFs, they have an array of products that they invest in, not just the bonds. So for them, and this is tested by several people, they have said, I want my money back, and within 2 or 3 days, you have your money back at no punitive rate.
Yeah.
But in any case, that's a very good conversation we can have.
Okay, I think I got a little bit confused, and I want to make sure that none of our viewers get confused. So if I go to Ndovu and I say I have 1 million Kenya shillings, I want to invest it in treasury bond, infrastructure bond, whatever. All right. I don't want to diversify that money into different portfolios. And then a year later, let's just say that bond was like, whatever, 15 years or 10 years. But a year or 2 years down the road, something happened. I want to pull out all my money. I go to Ndovu. I say, I want to pull out all my money. So because I did through Ndovu, you are saying I would get it at the same interest rate?
You will get the capital that you put in. Remember, central bank, if you put in, let's say, 1 million Kenya shillings, and now you want it back.
Yes.
They will have to sell it at secondary offer. They will buy it back from you because now you are withdrawing before it matures.
Okay.
So let's say the interest that they had given you initially was 15%.
Yes.
They will punish you for withdrawing ahead of time.
Yes.
And say, okay, if you want us to buy it back, we'll buy it back at 10%.
Yes. So lower interest rate.
A lower interest, yes. So you essentially are going to lose because you, if you have not had that money sitting there for a while, and remember you're getting paid twice a year.
Yes.
Right? So if you do not wait, if you don't give it time, you will get back your money at a lower interest because they are buying it back at 10%, yet they were issuing 15% initially.
Okay.
Yes. Through Ndovu, you will not incur any difference in the exchange rate. If you had put in 50,000, you want it back, you get back your 50,000 and you're done.
Okay. Just want to be clear on that.
All right. So, and it's a good conversation to have because a lot of people have been very concerned about, okay, I want my money back because things happen.
Yes.
And the reason for investing is for you to not lose, particularly in bonds. Your goal is to at least get back your capital or get something on interest.
Yes.
All right. So how do you do this? You have to be familiar with some of these terms. Maturity date, the yield. This is where we were talking about. So if the yield was 15% and now they are buying back at 10%, then you're losing.
Yes.
There's a competitive bid. So if you want a specific interest, then when you bid, because remember when you buy these bonds, you're putting it on auction. you are saying, I want a specific interest or non-competitive. I don't care what interest I get, as long as other people are okay with it, I'll take it. So the upcoming infrastructure bond right now is market determined. So if you put in 200,000, we don't know what the interest rate will be because it will go to auction. And investors will say, okay, I'll take 17, I'll take 16, I'll take 18, and then they do an average and say, oh, the average is 17%.
Okay.
And that's the amount that you accept because you did non-competitive bid.
Okay.
If you do a competitive bid, the instructions usually you have to put in a certain amount of money. I haven't looked at the most recent. When you put in or decide to buy these treasury bonds, and let's say you have 20 million Kenya shillings, and you decide this money, I want to collect 18%. So you tell the government, I will loan you 20 million Kenya shillings at 18%. Now, we're at auction. If the market determines that it's not going to get 18%, they are going to get 17%. So a lot of people bid and say, okay, we will be okay with 17%. You bid 18%, your bid gets canceled.
Wow. And you cannot participate.
Because it's above the market rate.
Wow. So you can just automatically go then to the 17%?
No, because you did a competitive bid.
Wow.
Now, on the other hand, let's say you bid and say, I want 15%, and the market determines it's 17%. How much will you get? 15%, because that was your bid. So usually,
wow.
Right. So we usually say, just go ahead. Don't be one of those people that are so tricky. Just do non-competitive bid. Whatever interest rate is going to be overtaken. Okay. Because then you get into these tricky situations of losing out because you wanted a bid that
was higher
or low.
Don't be greedy.
Right.
Okay.
Right. Okay. So just be familiar with these terms because they'll help you understand the prospectus and how to invest in these bonds. All right. And this is the instructions here of competitive, non-competitive, and the secondary market. Okay. So once you participate in an initial offer, you can decide to pull out of that bill or bond before it matures. Then you are doing it on secondary offer. Okay. And actually, I was reading something now. The government is trying to come up with bond market, East African bond market, which will be actually very good for secondary bids, so that the whole of East Africa can buy these secondary bids and make it more liquid instead of where it is right now. That would be a very good thing. Okay. All right. So corporate bonds, these are issued by companies to raise capital. And most of them usually want to expand. Tesla can issue a corporate bond if they wanted money. Any company really can just do a corporate bond and ask for money from investors in return of a certain interest rate. So if you're in Kenya and you're looking for corporate bonds, the one place you want to do it is go to capital markets and figure out some of the corporate bonds on offer. Dry and Associates actually does a lot of it. I know Faida Securities also have a newsletter that I send out every week and say, if you want a corporate bond, this is the interest. Here in the US, if you have an account with Charles Schwab or any of these major brokerage firms, if you go to their websites, you can actually tell them to send you offers every day. So on Friday, for instance, there was several of them. New York Port Authority is looking for money. California School District is looking for money. So all these are corporate bonds that you can participate in for a return of investment. Okay. All right. Green bonds. So this has become something lucrative. A lot of companies want to go green, renewable energy. We want to save the climate. So we have specific bonds geared towards the environment or renewable energy. So there is a lot of governments and companies that are issuing these bonds.
Okay.
And remember, it's very specific. If you are into green bonds and you feel as if this is where I should put my money in because I'm saving the planet, that's something you can look into, environmental projects.
Okay.
And they are linked and backed by governments and some companies. So there was one last year issued by Rwanda. It was actually the first in East Africa. It was a collaboration between Rwanda government and Belgian government and others. So they came up with this bond where they will use this money to build houses, come up with cooking products, for the communities. It was a very good bond. Okay. And that bond actually was issued at, I think, 12% for 7 years.
Oh, wow.
Right? So that's a very good way of putting money into green energy and renewable energy, if you wanted to think of it that way. Okay. All right, municipal bonds or munis, these are issued by states, cities, county governments to build highways, sewer systems. If you are interested in those kind of bonds, they are numerous. Schwab, Fidelity will also give you a list of this. Okay. The good thing about them is that some of them will not have any taxes on them. The federal taxes are
Yeah,
exempt.
I was actually going to ask you, I know we talked about the municipal bonds, but when we were talking about Kenya, we say that infrastructure bonds are tax-free.
Tax-free, yes.
Do we have the same here in the US?
Nope.
Okay, all right. So
never seen it. That's why it's very unique to Kenya, yes.
Okay,
very unique, yes.
Okay.
Everything else, apart from these municipal bonds that some of them are exempt from federal taxes, most of them you will have taxes attached to them.
Okay, all right, makes sense.
All right, great. So municipal bonds, if you're looking for them, again, Charles Schwab, Fidelity, you can just sign up to get a list of these bonds on offer. Read through. They usually don't have a lot of jargon on them because they're looking for money. You are loaning the money and you get an interest on them. That's what bonds are. Okay. So the other question you should consider when you're doing bonds is strategies, right? So we have several strategies when you're going to buy bonds. There's one called a bond ladder, just like a ladder. If you're climbing upstairs, so it's staggered. They're going to mature with specific dates, maybe 1 year or 25 years. Okay. Then you have a barbell. So these ones have different maturity dates, but you're focusing on short-term and long-term. You avoid medium-term. So you want a 1 year or a 25-year bond. You don't want anything in between. That's a barbell. And then if you're looking to get a bullet, then you're choosing specific. If I just want to collect this money in 1 year at 3.25%, 2 years I want 3.5%, 5 years I want 4.8%. So you can choose a strategy that you feel is going to work for you. So what we've done is go back to infrastructure bond in Kenya and let's create a bond ladder in which we will have a monthly income. So we are building this ladder with the expectation that it pays out in such a way that every month I can collect something. Okay. So in the last couple of years, that infrastructure bond in Kenya has been issued. And for the sake of argument, we'll call them IFB1, IFB2, IFB3. They are usually named differently if you're looking for specific bonds. Yeah. But for the sake of argument, infrastructure bond 1, that was issued back in January 2018 at 12.5%. It has a payment of twice a year, remember, January and July. Yes. So if you put in a million Kenya shillings at 12.5, you are going to collect 62,000 in January, 62,000 in July. Let's say you do the second one, IFB2, same thing, pays out February and August. Another million at IFB3 pays out in March, September. IFB4, April, October. IFB5, May, November. IFB6, June, December. So what you have done, every month, you're collecting a payment. So essentially, you have put in 6 million, and now you're collecting 62,000 every month. So it's almost like
okay. So you are saying, instead of, if you have 6 million, instead of putting it all in one shot, where you're gonna get paid twice a year, every January and every June, yeah? Or is it June or July? Okay,
Yeah,
whatever.
January and July.
Twice a year is what they pay. So if
Yes.
I have this lump sum of 6 million, you're saying you can break down that 6 million and do it in a way that you're gonna get return every month versus the entire 6 million getting paid twice a year, and then I have to manage these funds I'm receiving twice a year, how it's gonna last me the next 6 months.
Right, you got it.
Okay.
And let's say you have a parent or loved ones in Kenya and you always send money to them.
Yes.
If you set this thing up like this, then you don't have to send money because you know you're collecting 62,000 every month, and now it becomes their subsidy.
Got you.
Right, so that's a bond ladder, and you can decide to build it that way because it's tax-free. Remember, it's infrastructure bond tax-free.
Yes.
So that amount is what you're collecting in your bank.
It's not taxed, yes.
Right, not taxed. So it's a very good way of fixed income and collecting. And remember, some of these bonds have different maturity dates, which is the next slide. So IFB 6, for instance, was issued in June last year. It's a 7-year bond. Right? Issuing at 15.8, you get paid out in June and December. What you have to understand is this bottom information down here, repayment. So the fact that it's a 7-year bond, the government is not waiting until 7 years to give you your money back. 20% of it will be given back to you in June 2026.
Why is that?
Down here, they are not waiting until 7 years.
Oh, so you're getting half? Is it half? Oh, no, 20% of it.
20% in June, 30% in December, and then the balance to make it 100% June 2030.
So does that mean that your dividends that you're receiving every 6 months will go down? Your interest.
Yes, the interest, yes, it will reduce because it's no longer $1 million. Remember, we started with $1 million?
Because you got your
it's no longer
principal, your original investment, you got it back.
Yes.
Okay.
20% of it, you already got it back in June 2026. Okay. So that's why you have to keep building this ladder so that it doesn't dry up.
Okay.
You have to put this together and understand, I have done number 6. When am I getting back my 20%? Okay. As soon as you get back your 20%, you can decide, do I buy another bond? Or do I put it in a money market account? What do I do with it?
Okay.
Yeah, so this table here is a very good summary, and a lot of people don't understand it. They say, oh, it's 7 years, that's how much I'm going to collect, but that's not true.
So in all of them, they will start paying percentage of your...
So some of them will be 20%, it's staggered 20%, 30%, some is 50%, and then another 50.
Okay.
So you have to just understand which one did I participate in, what is the repayment structure, and when am I getting paid?
Okay. And
so
they give you this repayment structure upfront before you...
Yes, it's already in the prospectus. It's already in the publication. They actually have the specific date when you're going to get paid.
Okay. Not just when it matures, but when they're going to start doing like these
when you
percentages.
Get paid. Yes.
Okay. All right.
So this payment in June is a specific date.
Okay.
It can be June 5th, it can be June 15th. That's when you get your money. So you just need to take a paper and pen and go through your bonds.
Okay.
And figure out, okay, when did I buy them? When am I getting it back? So that you don't dry up, you keep investing.
Okay.
All right, moving on. Number 3, real estate and real estate trust. So a lot of us have participated in real estate deals, 2-family homes, buying your own home, Airbnb. I think that's something that needs no explanation. A lot of people know direct real estate investors, how you can make money through rental income, right? But there is a difference between real estate and real estate trusts. So if you are going to invest in real estate, there's obviously pros and cons. So there's usually positive cash flow. You're collecting from your tenants. There's tax advantages, and you make a lot of control over these decisions. Do I sell it out? Do I hold it? And then obviously some of the disadvantages requires time and energy if you're going to become a landlord. It's very liquid. You cannot just decide I'm selling my house tomorrow and it's gone. Yeah. If you're investing in direct real estate, then you should understand the real estate trust. So a real estate trust is a corporation. It's a company. They own and operate direct real estate, but you are not involved. You provide capital to these companies and they do the work for you. So it can be actually a stock, it can be a closed-end fund, it can be a corporation. When you give money to these companies, this is what they do. In return, they will give you a percentage. So look at the pros. The profits come to you without you managing or owning any of this. The returns are usually higher because of dividends and appreciation. And then it's very liquid. You can get out of this tomorrow because it's a company or a stock. You can just decide, you know what, I'm done. The cons, unlike direct real estate, there is no tax advantages because when you have a direct real estate, there's a lot of advantages. You can write off some of the expenses on your tax returns. These real estate trusts are very sensitive to interest rate fluctuations. So when you hear the Fed say that they have discounted the rate or they have increased the rate, they are very sensitive because it affects how they manage these companies directly. Because the higher the interest, then they cannot be able to buy more. The lower the interest, then they can be able to acquire more property. So if you're going to invest in real estate trusts, there are two platforms that you should consider or think about. One of them is called Fundrise, and the other one is called CrowdStreet. So both have
that's for here. That's for people in the US.
Yeah, that's the US. Yes, yes, this is the US. So they have very similar ways of doing business, and both platforms are going to allow you to participate. You can even do dollar cost averaging. You can put money every month, a certain amount, and that portfolio will keep growing. But you need to do due diligence on both, right? So these two platforms, Fundrise and CrowdStreet, have very similar ways of doing business. You just need to figure out which one you are going to work with and some of the pros and cons. I want you to do due diligence when you're going to participate in this because it's affected by a lot of things. It has its own fee structure. They are going to issue 1099K because you are actually a shareholder in some of these platforms. So understand how it's going to impact your tax returns. But it's a good way of participating in real estate without you managing or becoming a landlord.
Do you have to know where the properties are?
Yeah, the platforms, yes. The platforms will actually tell you where they are building or where they are acquiring property. And then you decide which one you want, or you can automate it. You can say, you know what, you do the work. All I'm looking for is this kind of return. Right. Okay, so let's move on to number 4. So we talk a little bit about stocks, ETFs, and closed-end funds, options, and futures. So, and it becomes scary when you talk about stocks and people don't like, they say it's really confusing. I don't understand it. But I want to give an example of Ronald Read. So Ronald Read is an ordinary person, just like you and I. He served in World War II, came back home, and for the next 25 years, he worked in his brother's gas station. Right? And then he actually retired at one point, but then decided, I don't want to retire. He found a job as a janitor at JCPenney. And all he did during this time he's working for his brother and working as a janitor, he was buying stocks. And he bought companies that he knew. So if I ask you, what companies do you know? You'll tell me, Costco. Okay, everybody shops there. You can say, Target, ExxonMobil, right? So there are so many companies that you know. That's what he did. He did not go crazy. All he did was, I know IBM, I know GE, I know Exxon. That's what he was doing. And time was on his side. Remember, he came back after World War II as a young man. And he just kept buying stocks. Do you know at the age of 92, when he passed away, he had a stack of stock certificates. Remember, we have moved away from stock certificates
Yeah.
to digital.
Yeah.
A whole folder of stock certificates in a safe
In
deposit
a
box.
safe box?
Yes.
Wow.
When he died, his estate was nearly 8 million.
Wow.
So investing in the stock market is not something complicated. A lot of people shy away from it. We are actually conditioned to stay away from the stock market, and it should not be. If you do the math on households, you do comparisons between Latinos, Blacks, and whites, you'll see such a disparity. The whites on average, $250,000 per household, Blacks, $20,000. So we are way off in investing in the stock market. And it's really not something that we should shy away from. What we just need to know is that it's designed to go up over time. And you have to think long term. Right?
I have a question for you. And maybe most people don't invest in it because, the risk, you're thinking, oh my gosh, I would rather just have my 20,000 in the bank where I know it's just going to stay there. It's not growing, but it's there. But if I invest in this particular stock and the company is not doing well and I can lose my money, what happens if your stock goes down to zero, okay? And then eventually the company start picking up. Do you ever lose everything or does it start to build again? Because I know there are some assets where you just lose everything. That's it. Kaput.
Right. So let's just do an example. So let's think of Facebook. When it went IPO, it was trading at about $40 IPO. So let's say you bought one share at the initial public offer. When it went into the market the first time, you bought one share at $40.
Yeah.
At some point in the next year, it dropped $20. So you have already lost $20, right?
Yes.
All right. Then in the next 5 years, it went to 99. So now you've made money.
You've made money. Yeah.
Right. And now let's say you did not sell and just kept waiting. Last week, it closed at what? 450. So if you think long term, as long as you're looking at companies that are performing well, they are great companies. Don't buy lousy companies. Companies that make sense, mean something to you, they service humanity, and you can pick from a whole range of companies.
Yeah. Yeah.
If I ask you, you will tell me a whole lot of companies that you know. Some of these companies have been around for 100 years.
Yes.
Johnson & Johnson, Coca-Cola. These are companies that if I asked you, do you think Coca-Cola is going bankrupt tomorrow?
No.
If I asked you, what about Apple?
No.
Do you think it's going to be around for the next 20 years?
Yes.
50 years?
Yes.
Okay. So those are the companies that now you start figuring out and understanding that as long as I'm able to buy them and hold. So you must have a plan for it.
But in the holding, that's what I'm trying to get into. In the holding, like you gave me an example of Facebook. When they went IPO, you bought a stock at $40 and then it went up, you gained, then it went down. And now you lost. When is there a place where it goes down that now you're at zero? You had invested $40. What happened when you get at zero? Are you kicked out of the market?
Yes.
You go negative and then grow back with it as it goes up?
So it depends on which company for sure. I don't know whether you remember during the internet boom of 2000. There were some companies that as long as they said .com, they just went up.
Yeah.
Then fundamentals, they were not good companies. For instance, if you do remember pets.com, that company ran up so high during .com bubble and then went up to zero. Actually, it went bankrupt. So to your question, if you are buying companies that are sound, they are going to grow, they have good managers, you should not worry about going to zero because the moment they drop is when a lot of investors actually buy. So I just asked you, do you think Apple is going to be around for the next 20 years. So if it's trading at 100 and let's say 180 right now, and for some reason something happens and it drops to 100, are you buying more or selling?
If it drops, I'm buying more.
You're buying because you know that this is a good company. So if you're going to participate in the stock market, there are a few things you will need to learn on your own. You need to learn when they perform, what they do, is it even worth holding? How long am I going to hold it? All that needs to be something that you educate yourself.
I was looking at Safaricom in Kenya.
Yes.
And I saw their chart on what do you call it? Trading View. And to me, Safaricom is this giant, big, huge company in Kenya, right? Like the same way you're asking me, do you think Apple will be around 50 years from now? Yes. So if you ask me about Safaricom in Kenya, I'm thinking that's a huge company. I mean, like these people get all these services from Safaricom. It's going to be here for a long time.
Correct.
But then I pull their chart and I see that it's been dropping. Now, for me, I'm like, I need to jump into this like right now.
Yes.
And buy a whole lot of stocks.
Right.
Every time I open Trading View, I keep waiting to see, okay, it goes up, it goes down.
Yes.
Goes back again, it goes down. And it's never going up. But again, I don't know why their stocks have been going down. But a company like that, somebody here who is a Kenyan, or even somebody back home, do you think this is a good time for us to buy Safaricom stock because they are really like down?
Well, actually, I'm adding on Safaricom personally. And like we say, this is not financial advice. People need to do their own due diligence. But Safaricom, if you travel to Kenya and you do any kind of business, most likely, if you don't have M-Pesa, it'll be a hassle because a lot of people are just so used to trading in M-Pesa and paying services in M-Pesa and making phone calls. This is a company that is almost a monopoly.
Yeah.
And it has just started doing business in Ethiopia. If you look at its recent reports, it added 3 million users.
But what's causing them to keep declining? Why are they just declining?
So, part of the reason is the profitability. Obviously, cash flow is usually the biggest in companies. If there is no revenue or they drop in revenue, investors will shy away. Because let's say Liz and company, I invest in you and I have given you $10. And every quarter you're saying, oh, I did not generate any money with your $10. Actually, we have lost $2. What am I thinking? I'm saying, well, maybe this is not the company. Yeah, she's not doing what she's supposed to be doing. I was expecting her to have grown these into $12 now.
Yeah.
So some people will jump off, right? But if you think of fundamentals and say, okay, perhaps Liz is using the $10 to build the platform. She is growing capacity. She's acquiring new managers. She's inventing in technology. Now I can wait. So if Safaricom is jumping into Ethiopia and they want to grow M-Pesa in Ethiopia, what's the population of Ethiopia? 100 million?
But that's a good thing for them. That's a good thing
Exactly.
for Safaricom.
So if you think that way, then the price dropping is actually a gift for you. You'll say, you know what?
For me who want to invest.
Yes.
But had I been an investor from 5 years ago, 10 years ago, and every day I look at that chart and I just keep seeing it going down and down and down, am I thinking it's time to sell my stock and get out?
And some people will definitely sell.
Okay.
Let's say you had bought it at the high of 45 and now it's at 13. You have lost almost 70%, a lot of money. So some people will definitely give up and say, you know what, I'm done. I don't want to do this. But those that are going to wait, are going to be disciplined, patience and discipline.
We go back to the two things you talked about, patience and discipline.
Parents.
Yes. Okay.
Right. As long as you have no need for that money, let's say it's not money that you need it for emergency. Remember, when you invest, actually, this is something we should have discussed from the beginning.
Yeah.
You're not going to invest if you have not done your budgeting and you have not planned out all these other areas of life.
Mm-hmm.
Those are things that you should take care of before you invest.
Okay.
Right. But so to your question, if you're thinking about Safaricom and such companies, just go back to what they do. Look at the metrics, listen to their earnings call, what's happening to that company. And this could be the greatest gift you get in the next 5 years. If 5 years from now, Safaricom is trading at 45, and now you are listening to this YouTube, you will be like, why didn't I even do it then? You'll have missed out. So think long-term about the stocks and have a plan for them.
And somebody in the diaspora wanting to invest in, I know you told us how to like buy treasury bonds, or maybe you have it in one of your slides. Somebody wanting to invest in a company in Kenya, like Safaricom or any other company, where do you go? Nairobi Stock Exchange?
Yeah, if you go to Nairobi Securities Exchange, there's a list of stock brokers.
Okay.
There are so many of them. Suntra, AIBXY, Faida. There's just so many of them. Opening accounts now is online. It's very simple.
Okay.
Once you open an account, you have a CDSC number that can track all your securities and your offerings. Now, after that, you just purchase. Actually, most of them have apps. If I wanted to buy Safaricom tomorrow, all I need to do is add money to AIBXY, my account, and tomorrow morning I can just go ahead and schedule a buy of whatever amount of shares. It's so easy.
Do you need to, can you use like a broker? Okay, I know you're saying you can use brokers, and I'm thinking of brokers in two terms. There is a broker, the platform, okay? The broker that you use to trade whatever. And then there's a broker, the in-between person, like, let me just like, I don't know if Dovu is a broker.
Oh, no, Dovu doesn't do stock market.
Okay, they just
Dovu does bonds, corporate bonds, and ETFs.
Okay, got it.
They don't do stock market. They are not licensed to trade in stocks. So if you need to buy stocks, you need to sign up with Suntra, AIBXY, Faida Securities. There's a whole list of. Perhaps we can do a link on your description so that if somebody wanted
to buy stocks,
get into them, they can. Yes.
All right. Perfect.
All right. So going back to this, think long term. And perhaps generational, because there are some companies you may want to give to your grandkids and just have them manage it. All right. So now let's talk about a portfolio. If you're going to buy stocks and you're thinking of portfolios. So remember, we have done a bond portfolio. Now let's talk about a stock portfolio. So if you are looking for income or cash flow, there is a way that you can build a portfolio which pays you 6, 7, or 8%, right? And you can even do this if you have a group or it's just on your own. This is so easy to do. So let's think about several stocks that give you a return of 8% and above. Now, I did mention that the stock market on average has given you 8%. Now go back to 150 years. 150 years ago, S&P on average, if you reinvested the dividends, has given you 9% over 150 years.
Okay.
100 years, 10%. 5 years ago, 10%. 10 years, 12%. So on average, if you are not able to beat the S&P return, then you are underperforming on your portfolio. So think of yourself as a fund manager, somebody hired to do a portfolio for your family.
Okay.
So let's think about it. If I was going to do this and I'm looking for income in retirement or just income every month, I can pick a few companies that pay me on average 10% and collect the dividend. So remember, dividend is profit that's shared with you by companies. You are a shareholder. Let's say you own Chipotle. They issue a dividend. They say, oh, we did so well. We sold a lot of burritos. And now we are actually giving each shareholder $2. The dividend. You're collecting it because you are a shareholder.
Okay.
So one of the things that we can do is build a portfolio of stocks, companies that pay you monthly or even quarterly. And this is something that we just figured out. If I can have, or even think about in retirement, if I have $136,000, I know it sounds a lot of money, but let's say you start early and think, okay, I need to build a portfolio of stocks that I can collect $1,000 every month. This portfolio, if you notice, I have companies here. I have PTI, I have UTF, I have TLY.
Yeah.
It tells you the name of that stock. It tells you the next payment because they issue dividends every month, some of them quarterly, and the dividend yield. This is the return. So if we put in 1,000, if you buy 1,000 shares of each of these, it will add up to $136,000.
Until somebody says, who has $136,000 sitting in the bank account, just like that.
Right. But if, let's say, we are building this portfolio, you don't have to have 136. We can start with $1,000.
Yes.
And in 30 years, we grow this account.
Yes.
Or we have $20,000 and we grow this account.
Yes.
The end goal for you, let's say in retirement, is to collect $1,000.
Yes.
So if I'm 55 or I'm 65 and I'm getting paid $1,000 every month, that's income that can do something. I can travel with it, I can pay bills.
Yes.
And I'm not touching the portfolio. I'm not withdrawing any money from it.
Yes.
All I'm doing is collecting the monthly income.
Yes.
So that's a very good way of looking at portfolios and saying, okay, so I've built one portfolio for $136,000. I have not touched my 401k. I have not touched my pension. I have not touched any other retirement accounts.
Yes.
If I add them up at retirement, now I'm looking at cash flow. And this is a good way of thinking about it. All you have to understand is which companies these are, what they do, and then go ahead and develop this portfolio for yourself, or your family.
Got you.
All right, number 5, we go back to East Africa. Okay. So somebody's in Kenya, they're saying, oh, I don't have access to that 136. I don't even have those kind of companies. What do I do? So this is actually a challenge for teenagers in Kenya or somebody that is still very young and they have a holding period of 20 years. So how about we talk about Equity Bank? It's one of the best banks in Kenya. Okay. Actually grown a lot. They have now gone to Congo. They have a lot of equity. They have very good management. You know, the CEO there, very driven about what he does. If we buy, our goal is to buy 100,000 shares at 36 shillings per share. And we're going to hold it for 20 years. The dividend yield for Equity Bank is 10%. Oh, wow. If we just add 500,000 Kenya shillings to it every year, obviously there is the dividend tax rate. We expect the dividend to grow at least 1%. We expect the stock price to grow at least 2% in 20 years. We are going to reinvest whatever amount of money they pay us. The question now is, what do you think is the ending balance of all this work we've done?
Look like it's going to be a whole lot of money. If we
have done the math down there. If you can see, it's very tiny down there.
Oh, let's see. What is that now? Is that
73 million?
Billion. Yes, almost 74. Wow. In just 20 years.
It's not complicated. You start doing this, and in 20 years, if you're looking for that kind of return, do it. You just use a calculator. All right, back in the US, let's say, all right, I have no access to Equity Bank. What can I do here? Same thing. We look for a company that's going to last 50 years.
But somebody here, though, just for a second, anything that you're talking about people in Kenya can do.
Yes.
Somebody in diaspora who has a dual citizenship, or you are Kenyan in any country, you can do the same too.
Oh, yeah. So if you are
your Kenyan documentations.
Yeah, if you're a dual citizen, now you have best of both worlds.
Okay.
Right. So back here, you know, it's not complicated either. Pick a company. Meta, AbbVie, Apple, any of these companies that you think is going to last for 50 years. And the plan would be $50 bi-weekly. So most of us get paid bi-weekly in the US.
Yeah.
So just take $50, set a schedule, buy these companies, and look at the result in 30 years. We can do a calculation in a website.
So we're talking about $100.
$100, yes.
Okay.
And in 30 years, you'll be amazed at how much we can accumulate.
So how much is that gonna be?
So if we pick, let's say we pick AbbVie, I can do the calculation on another, when you do the website.
Oh, okay.
But if we do a return of, let's say, Verizon is paying 7%, one share is $40, so we are able to buy one share every 2 weeks. And we do this for the next 30 years. You'll be amazed. I'm estimating about $160,000. And this is just for somebody that is just doing $50, right? So we'll go ahead and end up with several scriptures here. I like going back to understanding why we do this.
Yes.
Committing what you do and your plans to the Lord. Seeking counsel, because if you don't have people that guide you, most likely you will fail. And if you're going to be building this tower, you have a plan. Sit down, count the cost, because everything has to be pre-planned.
Yeah.
All right. So don't forget calculators. We have 1 million of them. Now, these calculators will help you estimate and do the revisions and at least understand. Now, one thing that I want to leave your audience with is education, investing in yourself, learning, going back to taking classes. Because if you learn, the more you learn, the more you earn. That's Warren Buffett that said. This is one of the greatest investors.
I agree.
So we'll end up with this. If you want to join Pete and Pete Investors community, we have an investor community. We publish all this information on our Discord platform. That platform is actually very versatile because it will tell you what's going on. Anything that is happening, we publish it. Those that want to do infrastructure bond, we published this almost 3 weeks ago, even before we knew that it was going to come. We published that information ahead of time. We talked about corporate bonds. We have information there. We have stocks that you can consider. We have options. So that platform is a good place to be if you're an investor. And all you have to do is pay $99 a year. 99 a year. I see people go to TGI and spend lots of money. Just $99 a year, you can be able to get all this information.
Investing in this type of knowledge is absolutely, absolutely worth it.
No, I just wanted to go ahead and share some of the websites that we've mentioned real quick.
Okay.
Let's see. Oh, here. This is what I wanted to share. So if you go ahead and join our investor community, this is our Discord group. So our Discord group is divided into topics. And all these topics is information that you can get. We have, if you know what SPX is and you want to trade it, we trade this every day. Or for 2 hours. We have long-term investments. We have ETFs. We have contrarian income. Remember, we talked about CEFs. We have futures markets. We have bonds. We have these calculators. Oh, here, this was the question that you asked. The schedule for payment. You see this schedule for bonds. It tells you exactly the first payment will be 19th August, 2024. It gives you that list. Yes. So this is a platform that we share with investors. This is the one for $9.99 a month or $99 a year.
So once they pay the $9.99 monthly, they can either choose to pay monthly or they can choose to pay annually. They have access to all of this?
Yes, they have access to all this information. And you still have access to, if you have a question about anything at all you have to do is reach out and say, I'm interested in contrarian income. How do I develop that kind of portfolio? I'm interested in ETFs. What is an ETF? So we just published this, January 19th, how to invest $10,000. So if you have $10,000 and you are interested in ETFs, this was a good one, 3.5% dividend yield. The expense ratio is 41 cents. The current price was $45. So that's maybe you can think about it that way.
Yeah, that's
right. If you are thinking about IPOs, right? Remember we talked about Facebook IPO?
Yes, yes.
Discord is actually launching an IPO. This platform itself has an
Discord?
IPO coming.
Discord themselves?
Yes.
When is that?
They do. They haven't published the date yet, but we are projecting this year. So there's a link here if you're interested in the 5 tech IPOs to watch for in 2024.
So there's a lot of information here for your members.
There's a lot. There's actually a learning library. This is a learning center. If you look at this, we had information about inflation. And those that don't know what inflation means, if you go to Zimbabwe, you'll be surprised that there's $100 trillion note.
What? Oh my gosh. How is that even possible?
Right. So
I'm already thinking 1,000 Kenya shillings note is a lot of money.
Yeah. So we have, that's the learning center, right? We have recordings of things that we have done in the past.
Okay.
Right. We have, if you want to establish a brokerage account in the US, we have Tastyworks. In Kenya, we have AIBS. So these are links that you can use.
Okay.
We have events. So when I do whole events, I do publish them here. For instance, this is our year-end review. So I published what we did last year.
Okay.
In terms of trades, in terms of income, in terms of fixed income. So this is just a summary of what we do. And it could be something that is beneficial to someone that was just looking to go ahead and invest. Then we have classes. I'll finish with this. We have classes. Let's say you are interested in taking a beginner class. And a beginner class is for stocks. So this is the beginner class. This is online. It's available. You can study at your own pace. It's 4 sessions. There is a quiz and homework at the end of each session. And you have access to to me, if you have a question about session 1, let's say I talked something about ETFs or P ratio, I can't quite understand what that is. You just let me know. Okay. So the more you earn, more you learn.
That's amazing. So there you go, guys. You have access to a lot of good information. But just to clear, because I know we are talking about a lot of stuff, and it's a lot of stuff out there, both here in America and also in Kenya. I want you to take a minute or two and talk to people, because a lot of people nowadays, the minute they hear about trading anything, trading stock, trading future, options, Forex, whatever, the first thing they think is, oh, I'm being scammed. Because there's also a lot of crooks out there, and that happens in almost every profession out there. But I think lately there's been a lot of crooks and scamming people, only because they don't know. And I personally see it on Facebook, where people will post, for example, Forex, where people will post, oh my gosh, look at what I made last week. And every day you are seeing this person made $1,200 last week. They made a couple of $1,000. They made but the person who is looking at it, being that they are not familiar with how this demo account works, they think that this is real. All right. But somebody like me or like you can look at what was posted, and if somebody posts 2-3 times, I can tell these are all demo accounts, because they never post one that shows the withdrawals, because you can never withdraw from a demo account. And I want to make that clear to our viewers, because sometimes I just see these things and I let them pass. But I want you guys to know that, yes, there are some legit traders that are out there doing stocks, doing stuff like what Peter is teaching us, that are legit. But don't fall for what we call demo accounts. If somebody is not showing you their withdrawal, then it's most likely it's a demo account. If you want to know that they are making money, you can see the deposit, you can see the transaction, and you can see the withdrawals, right?
Correct.
So take the time to talk to people, because there's a lot of fear. I've seen a lot, especially coming out of Kenya, where people are being scammed and people committing suicide because they see their peers are making crazy amount of money and they are not. So let's talk to them so that we can let them know that, yes, unfortunately, it is what it is. There are people who are out there saying, oh, I make money trading stocks, and they are not. And then there's the legit people. And that happened in almost, come on, it happened even in the preaching. There are fake preachers and prophets and they are the real genuine ones.
Mhm.
But sometimes the fake ones or the bad apples make everybody else look bad.
All right, and that's a very good point to put across, because trading has become very fishy, and you find a lot of people getting pulled into sign up with this Discord. This is our return, and they'll just publish something on Facebook or a note saying this is my return. One of the things that perhaps you can think about is ask them if there's a platform that you can track this information. Is there a place that you publish these results at the end of the day? Can you verify those results? So for instance, when we publish trades on SPX, because we trade every day. So one of the things I do, like February 2nd, this was on Friday. So we publish this particular trade. We say, this is what you need to do.
Yes.
This is an idea. This is SPX and Ion Condo. The entry of this Ion Condo is given there. And we are telling you that you should collect 35 cents per contract. And we are expecting that trade to stay between these two numbers.
Okay.
Now, when I publish this, the first thing I'll do here is say pending. At the end of the day, we will come back and say, did we close with a profit or a loss?
Okay.
And you can see if it's at the end of the day, it's a profit, you can go back and verify yourself and say, did it stay between these two numbers to make a profit?
Because you can open the chart yourself and look at it.
You can even go back actually and simulate this trade.
Okay.
Because there's a way on TD Ameritrade, you can use on demand. 2 days ago, just do the same trade and see whether you collected it or not.
Okay.
That's a good place of figuring out, are these people legitimate or not? If we close with a stop loss, we will publish it there.
Yes.
So you have to ask this question, is there a place that I can verify these trades? Is there a place that I can track these trades? Before I even commit the money, is there a place that I can track it? Because the problem is they will publish something and say, also too, there's these traders that will get in and out very quickly. So they will put in a trade and they're looking for 5% return and they call it a profit. You, because you don't understand how to trade, you're waiting for 100% return or 120% return, and then you lose. So the first thing I think that's very important is educating yourself on what trading is.
Yeah.
And understanding your personality. If you cannot afford to lose $20, you're not consistent, then don't trade.
Yeah.
Trading is really emotional. And I've seen people do all kinds of things when they're trading. Some people you will sweat, you will have headaches. Some people are not even able to concentrate after that. So you really need to know who you are before you trade.
Yes.
And then educate yourself before you trade, understand what trading is. If you can do all this, then become a Ronald Reed. Just buy things that you know and then invest instead of trading, because there's a difference.
Yes. And that's why we are very happy that you're here walking us through all this information. You know, it's not just a walk in the park, but if you're dedicated and you're willing to invest time and a little bit of money, because to be quite honest, based on the type of information that you have here, $99 a year or $10, $9.99 a month, it's really little money. So for anyone, I mean, it's just like school. You don't just wake up one day and you're a doctor, wake up the next day you're a pilot or you are a teacher. You go to school and you learn. And I think when it comes to entrepreneurship and stuff like trading, we want to be rich overnight, and we don't have the patience to invest in learning so that when we get in this market, we know what it is we are doing. So I am so grateful that you have taken the time to go through all these details with you. I personally will have to go back and watch this video like 3 times. I know there's a lot of information I personally need to soak in, and I'm sure our viewers who are interested in this and who do decide that, hey, this is something that I can start little by little. You may not have the money to invest today, but what Peter was saying is, even if you build it gradual, it will eventually help you, whether it's for your retirement, whether it's for your kids, it will eventually help you. Before we close, is there anything else, Peter, you would like to add that maybe you did not share?
It was really a lot of information to soak in. So if it confuses you, just pick one of the 5 things to consider and then get started. Don't bundle everything. If it's so confusing, reach out. Let us know. Let's say, for instance, you just want to buy the bond that is already on offer. And you don't know how to do it. Just go to Njoroge, open an account, and go ahead and purchase that one. If you're interested in stocks or you're taking a class, just pace yourself. There's no rush. Reach out to me. The contacts for Pete and Pete, there's a website that we have. Go to that website, read a little bit about me. I have contacts there. Reach out to me for anything that you would want to know or advance. This is what I do, and I'm really glad that I was able to share this with your audience.
Awesome. One question that just came to mind before we close: is there a minimum investment or other amount of money you have to invest when buying treasury bonds or whatever infrastructure bonds?
Yes, for treasury bonds, yeah. If you do in Njoroge, the minimum is 50,000.
50,000
Kenya shillings.
Okay.
And treasurydirect.gov here in the US is $25. Yeah, let's share that website. I think I had it here. Treasurydirect.gov. Let's see, do I have it? Let's see. Beginner events, buying. Yes. So this is Treasury Direct. You go to this treasurydirect.gov and you open an account here. So they'll ask you create a new account.
Okay.
That account is going to allow you to buy the bonds. So you see there is Series I savings bonds for 5.27%.
Okay. Oh, wow.
There is Series E 2.7%. All you need is $25.
Do you need to link this to your bank account? Like
so they will, yeah, you can link to your bank account if you want to withdraw $25 every 2 weeks to buy these bonds. Yeah, you can do that. Yeah.
And you say the minimum investment here is what?
$25 here.
$25, you guys.
Yes.
All right. So of course that's the minimum. And in Kenya, 50K through Njoroge.
Right.
What about
50K.
through Central Bank Direct?
Same thing. Central Bank is also
it's the same thing.
Yeah. In Central Bank, remember, there is that app that we talked about.
Yes.
So this is the website for Central Bank. And this is where we said they have this disclaimer about maturity.
Can you zoom your thing? The 3 dot.
Yeah.
Right. Go to the 3 dots on the there.
Zoom in.
Yeah. Right. There. Pick it to 125. There you go. Now we can see.
Good.
Yeah.
There.
That's good.
Yeah. So this is the disclaimer we talked about.
Yes.
They do so at a punitive rate.
Okay. So that's the advantage of going through Njoroge.
Right. But if some people will say, oh, I just want to do Central Bank. You just have to understand how they do business.
Yeah.
And again, there is an app that they are using investing in treasury bonds. If you say learn more, they have this app they launched in October. Okay. That you have to download and then go ahead and complete the details.
So this means you can bypass your bank account. You don't have to go to Central Bank in person, of course, if you're in Diaspora.
Right.
And you don't need to go through your bank, let's say Equity or Cooperative Bank or whoever you bank with in Kenya. You are opening it on the app, dealing straight directly with Central Bank.
Right. So and they have a user guide of how to do it.
Okay.
This is the portal that they are using to purchase bonds.
Okay. Awesome.
Right.
What as far as government documents, what do you need? Your Kenyan ID or passport?
Yeah, you need a passport or Kenyan ID and your KRA PIN.
KRA PIN. Okay, got you.
Right. But they also do ask whether you have a bank account, because then you'll need to
your deposit
transfer. Right.
Okay.
And if you have a brokerage account.
Okay. Do you have to have a brokerage account?
You have a brokerage account is going to help them attach the CSD. See this CSD, the Central Depository Account. This is where they track, or you're able to track all your offerings.
Oh, so do we need to have
so there's
that
instructions here. If you go to a central bank website, there's instructions of doing it.
Okay.
It's not complicated, really.
Okay.
No, you just need to follow the steps. This is how you open the account, registration, individual persons. If you're doing a joint accounts, if you are Chama, there's a way to do it.
Okay. All right. So they have all the instructions over there.
If you are not ready to do all that, just go to Ndovu. 5 minutes, you're done. You have a contact here that you can reach out to at any.
And you say the payment is what? When you go through Dovu, what was the payment? Is there a fee for that?
Yes, there is a 1% fee.
Okay.
If the amount that you put in is less than 1 million.
So if it's less than 1 million, you pay what, 1%?
1%.
That's what you're paying them for the service.
Yes, for the service.
Okay.
But if it's more than 1 million, it's 0.75%.
Okay.
For 2 years, and then that's it.
What does that mean for 2 years? And then
so 1%, remember, these bonds are for many years, 7 years, 12 years, 15, right? So if you buy a bond for 7 years and you don't put 1 million, they will charge 1% every year. Whatever amount you're collecting, minus 1%.
So does your interest that you get every 6 months go through Dovu, or how are they?
So what they do, they will actually, as soon as CBK releases the funds, they send you either a text or an email saying, we have received these funds from Central Bank. If you want them to deposit in your M-Pesa account, they can. If you want it to go to your bank account, they can. But there is a new feature that they are launching right now called the wallet. So instead of that money going to banks, they can hold it for you, and then you decide what you want to do. Do you want to buy more bonds?
Okay.
You want to buy fixed interest? What is it that you want to do?
So for somebody here in the US, from what I'm seeing here, it's like how you use H&R Block to do your taxes.
Yes.
And they charge you a fee, but somehow when the government releases your money, H&R Block are able to take their pay, and they ask you whether you want a direct deposit, do you want a check? So it's something similar to that.
Very similar to that, yes.
You got you.
Right.
Awesome,
and the last presentation we did with Ndovu was really exciting because they have now approval to participate in bonds in Rwanda, Uganda, and they were going to Zambia. So now you can see you're building a portfolio, not just in Kenya. If there's a bond in Rwanda, you can buy it through Ndovu. If there's a bond in Zambia, you can buy it through Ndovu. So it becomes very diversified. You're not just stuck to Central Bank of Kenya.
Okay.
So
and also here you said if you go through Ndovu, do you have to worry about having a Kenyan phone number?
No, here you just put in your phone number. You can even tell me that you have opened an account.
Okay.
And then I will hook you up with Caroline immediately.
Okay.
Caroline will call you in the middle of the night. She's very good. She'll ask if you have any questions.
Okay, perfect.
You will ask, okay, is there something else that you need help with?
Okay.
If you have a concern, you text her.
Okay.
You're not emailing like Central Bank and waiting.
Okay.
Very versatile.
Do you know what is the current rate? I think you may have said it. I probably forgot. The current bond. What is the interest rate?
Oh, it's market determined, but we are expecting 19%.
19%?
Yes.
19.
Yes.
Oh,
it might actually hit 20%. That's the expectation.
That is really high.
Yes. And remember, you only have another 10 days to do this. If you're going through Ndovu, the cutoff to collect payments is February 10th.
February 10th. We're talking about 5 days.
Yes. So you have to really go ahead and open this account as soon as you can so that you are ready. And the instructions I had shared, I don't know if I can go back there real quick so that somebody looking for that screenshot.
How do you know when these open up?
So the bonds on average, last year we had 3 infrastructure bonds. IFB 5, 6, 7. So this year, we already done this one in February, but we are hearing that they may not issue another one until the end of the year.
What? So
Yeah,
what's going
that's
on in
this
Kenya?
will only be twice a year. So whether it's twice a year or 3 times a year, the opportunity arises like this, you take it.
What's going on in Kenya? And you may not have the exact answer for us, that the Kenya shillings has lost so much value. And I saw something, somebody had posted, I think it is Sarah Munyeri had posted on Facebook, something from Bloomberg, I think, where
Yeah, projection.
that the Kenya shillings to the US, it was going to go up to like crazy number, like
300 in 2030, yes.
That's crazy. And I'm thinking,
right. So I'm not an economist, but obviously I do a lot of research in these things.
Yeah.
And there are several factors attached to this. Obviously, import-export is a big deal.
Yeah.
We no longer export as much as we should. So a lot of people would prefer holding dollars rather than the Kenya shilling, because then there's a lot of supply of Kenya shilling, but no demand for the dollar. That's one big factor where we are not exporting as much as we should. Then we are also accumulating a lot of debt.
Okay.
Okay, so there's a lot of money that we borrowed and now it's being repaid. It's maturing. For instance, the Eurobond matures in June. And that's a big deal because we have to convert our Kenya shilling to the US dollar to pay it. And now you can imagine if we had gotten the loan at 80 Kenya shillings. Now it's at 160. We're paying almost, so the interest will keep compounding if we don't do anything. That's part of the other problem that we have. Wow. Management, obviously, corruption is another one. So there's a lot of factors that is affecting that shilling. And at some point, it cannot continue like that. There has to be some fiscal responsibility. There has to be some people that sit down and say, okay, what is it that we can do as a country to at least move away from this borrowing and develop the public-private partnership, because we don't have private companies that do business as much. We rely a lot on the government. You know, people would rather be paid by the government and not do industries or farm or at least grow the economy. That's part of the problem too.
But how does them like paying such high interest rates on their like treasury bonds, whatever, how does that then help the government?
So if they borrow from you and you give them $20,000, they pay you at 20% over the next 7 years, they can be able to offset these current debt. They have some money to pay some debt. But the problem is
that's not going to be a debt on top of the debt when they are paying.
But they're also 20%. Borrowing from you.
Yeah, that's what I'm thinking. Like that's a debt on top of debt that is being paid at a very high interest. I mean, for me, it's good as an investor if the government doesn't default, God forbid. But I'm looking at it like they're borrowing from me at a high interest rate to pay this other debt over here. How does this cycle like stop?
Well, right now I can see that the dollar has stabilized actually. Remember, we were running up to 165 2 weeks ago, and now we have dropped back to 160. So as long as we stabilize where we are, you know, between 150 and 160 for the next 8 months or 9 months, now that's better instead of free falling. Yeah. Where you actually end up just devaluing your currency, like what Nigeria has done. Wow. It has. You talk about currency risk, Nigeria is even worse.
Oh, Nigeria is worse?
Oh my goodness, way worse. If you look at the charts for how far Nigerian Naira has dropped, oh my goodness, it's just falling like a rock. And that's a big problem for importers, because then you cannot be able to determine what rate it will be tomorrow.
Wow. That is sad. Now your money, whether you're sending to do so, it's the value of it is, even if you're sending it in dollars, eventually you end up losing it. That's you explained something like that. Where
inflation, and inflation is, now it's at 6.9%. So Whatever amount of money you were able to buy last year, the cost of bread last year, if you were sending $1, it's no longer $1.
Wow.
So we really do need to have some kind of responsibility. And I hope the government, figures out this stuff, or at least listen to economists and have people that are competent. Other than that, we can talk all about investments and end up losing because some of this physical responsibility relies on someone else, not just you.
Wow. Awesome. Thank you so much, Peter. Oh my gosh, you have given us a lot of information. So, hey, everybody, take this information. You decide what you want to do with it. I know what I want to do with it. But again, for $9 a month to have access, thank you. For $9 a month to have access to it's Discord, yeah? Your Discord group.
Yes, right.
And you're staying on top of all these, like all these questions I'm asking, like how do you know when these things are up? When do you know when these? What do you know what company is up? Who has an IPO? Peter has all that set up, so he just put it in the group. Your job is to go look at what he has in the group. Of course, there is a part for you to play. It's not that easy, but I like the idea that you're doing all this research and updating your group. I also like the idea that you are actually putting in whatever you guys are trading. You are you're logging in daily. We did this. This is how much. If you lost, you put in, we closed that stop loss. And if you made money, you said it was 100% profit. Right. So there's some type of like, you can track to see what these guys are doing or whether they are just out there telling you they're making money and they are not. So that is amazing. It's $10. It's about 1,000 Kenya shillings, couple of thousand, a little bit of 1,000 if you're in Kenya. If you're in the US, $9 is $9. I mean, like, gosh, you can't even eat lunch with that unless you are going to McDonald's. So thank you so much, and we'll plan to have you back. We plan to have you back.
Oh, definitely. Right. So if there's questions that come up and your audience says, oh, perhaps we can focus on this now, then I'll be glad. I'll be glad to come back and explore you a bit more.
Absolutely. Thank you so much, Peter.
No problem. Thank you for having me. I appreciate it.
You're welcome.